Welcome to The Road Less Traveled with Tiffany Rosenbaum. This podcast is about sharing the success and failure of entrepreneurs. Join in and learn from others' mistakes so you don't have to go through the same hardships in business. Now let's welcome your host, business coach, real estate investor, and proud wife and mom, Tiffany Rosenbaum.
Welcome to another episode of The Road Less Traveled. We are excited, and we are putting Daniel and I both in the hot seat, which we're really excited about. So listen up, because it's going to be something we haven't done before, but it's all things real estate. Most investors spend months analyzing deals, second-guessing themselves, and wondering if they got it right or missing something. But what if, instead of starting from scratch, you could choose from deals already filtered by a company that evaluates hundreds of properties a month and actually operates them every day? Today, I'm sitting down with my business partner, Daniel Rosenbaum, to talk about a new initiative we're rolling out, one that changes how our investors access real estate opportunities inside our portfolio. Let's get into it. I'm really excited about this. This actually came to me after Daniel and I love investing in real estate. And it came to us about doing something different for our investors. What problem pushed you to start offering deals directly to investors, Daniel? Why did this happen? Why did you want to do it? What was the big thing?
Well, no matter how deep your pockets are, any client, any person, you're always going to have a cap. Okay, every investor comes across this problem in terms of, hey, you only have so much to work with your own capital. So people either reach out and use other people's money or they borrow. And in our case, the problem is, we're obviously going to be limited too. And what's interesting about what's happening, we've been buying from the trustee sale for years, ever since 2010. And it's been a very good, in my opinion, place, and it's been an amazing source for investment properties. Because it's quick, it's instant, you avoid a lot of title fees, and you get it from the trustee sale. And the opportunity and the win is going to be with our clients of, a lot of our clients have the goal to grow their portfolio, to expand, right? To continue to build wealth for themselves and for their portfolio and for their estate and their household. And one of the biggest issues in real estate is finding the deal. It's like if
finding a good deal.
Finding a good deal that makes sense, right? And it's one of those things where it's like, if everyone had access to the deal, it'd be a no-brainer and it'd be easy. It's like, well, yeah, it's always been the challenge of over the years of what can you do to find the right deal? Because if you already had just an easy way to source the deals, it would make a lot of sense. And years, when you analyze a deal that comes to you through wholesale or through, people blast out on lists, and in many cases, not all the time, they don't make sense.
How many times on the MLS or things, someone says, hey, this is a great deal. I just had someone come to us, and I got on the phone with this guy, and it was the saddest situation because he bought this house because a real estate agent said, hey, it's a great deal. He didn't run numbers according to what he should have, and so I went through the process with him, and I'm like, you're negative every month. And he's like, what are you talking about? I'm like, this is how we break it down. You need to understand every month you're at least putting $500 to $600 into this property to make sure it can run successfully. And he was like, really? And he's like, I've never had someone so matter of fact, to the point, very honest about if it's a good or bad deal. I said, because at the end of the day, if we tell you something's good, are you ever going to come back if it wasn't? No. And so on my side, and I think the deal flow, like you said, is one of the most important things on my side is, I remember back in 2010 when one of our first investors came on to us. And how you deal with investors is not normal for a lot of places because you will flat out tell an investor, do not buy that property. I don't know how many people have actually seen do this. And this investor is still with us today. And he literally still comes to you. There's multiple like this, but this one comes to my head all the time because he still comes to you and talks real estate with you. He still asks for your advice because he knows at the end of the day, you are not going to recommend a property unless it's a good deal. And so the reason why we brought this about is literally what happens is we buy the properties first. we will keep them, or we will actually rent them, or we offer them to our investors as well. And the reason why we brought this on and we do this is because we want to verify and say, hey, we're putting in our money, we're making sure you understand this is something we would keep, and so we are recommending it to you. And now real estate's not bulletproof, guys. Like, let's be honest. There are going to be ups and downs. There's going to be market shifts. But at the end of the day, if you buy right, what happens? You make money. If you buy right, you can ride any storm. If you buy right, you will make money at the end of the day. But go ahead.
Well,
sorry.
let's be clear about it too. When we got into the market in 2010, a lot of the clients that we, not a lot, but a handful of the clients that we started working with,
we still have today.
Well, yes, but I'm just talking about other clients who have come and gone as well. They got caught with the downturn where they bought a property, and even some of the properties I remember, and some of our former clients, where they bought a property, for example, for 150, and at the time when it was built back in 07, at the peak of the market, 07, 08, it was worth maybe 300, and they even said, well, I couldn't imagine it going less than 50% of the value at the time. So say, for example, in this example, the property was originally worth 300 grand at the top of the market, and then they bought it for half that at 150. But then they still got caught because instead of the property being worth 150, it ended up being worth like less than that, like even less than 100 grand, like even like a quarter of that. And my point being that is just that, hey, things can happen. And the fact of the matter is, when you're in a secondary market, meaning further out. So like you have the Phoenix Metro and you have different submarkets of it. And some of the markets that we're buying in, we're very comfortable with it because we have several doors there. We've been doing business there for almost a decade now. And my point is, they're the first properties to suffer in a downturn, and they're the last to recover from a downturn. And right now, those properties, they're higher risk because of some of these properties are located in secondary markets, tertiary markets, further away from the main metro.
I think that's why I said
they can come back. They do come back strong.
But that's why I said if you buy right.
Yes.
Because if you buy right, even if the market turns, you can hold on to a storm. Like, you're not over leveraging. You put a higher vacancy. Like, the way you run numbers and I run numbers compared to what normal people run numbers are completely two different things. We put what maintenance should cost. I can't tell you how many times I've gotten on a phone call with an investor and I'm like, what's your maintenance budget? He's like, what are you talking about? I don't run that. I'm like, what's your vacancy budget? Oh, I don't do that either.
They also don't factor in a normal management fee or vacancy, like you're saying, and a maintenance fee. So when that happens, it's not realistic.
It's not. Every time we analyze a property, there's a management fee, there's a maintenance, there's everything goes into this property, because at the end of the day, you have to budget for things going wrong because they will go wrong. An AC unit will go out, a roof will go, it just happens, and that's how you do it. But a big question is, why are we doing this now? Why not before? Why is it happening now? Why have we decided to take properties that we will buy first, make sure you understand we recommend them, and offer them to the clients? Why now?
The truth of the matter is there's becoming more opportunities. Okay, so in the past 3 to 4 years, we were lucky if we bought maybe 1 or 2 properties the entire year that made sense to do a buy and hold from the trustee sale, from the auctions. Okay, and when I look at the other wholesale lists that are blasted out, many times they just don't make sense, or at least from what I've seen, or they're really geared towards fix and flip investors, which has never been our focus. We've done a handful here and there, and we've come across them, and we've done a couple projects here and there, but it's never been our focus. Our focus has always been long-term buy and hold. So the reason why we're offering these up is because what I like about these deals is they're newer builds. In many cases, they're newer builds. Many times recently, we're getting stuff that was built in 2022, 2023, 2024. So I like that. I like that a lot. And all of these deals have some piece of equity into them. So for example, if these properties originally sold for 300 grand, now we're picking them up for, in some cases as low as 150, 160, some cases 200, 225, those ranges. So there's piece of equity. So, but yeah, we're offering them because it's a win-win. It's a way for us to continue growing our business with property management. In full transparency, it's a way to continue growing with our clients. It's a win for our clients because they can continue to grow their portfolio and their assets as they're wanting to generate more wealth long-term. And so it's all around a win. It's a win-win.
I think the biggest win is for our clients. And the reason why, in my mind, we started this was because clients aren't usually here They're not in the real estate market every single day. So in their mind, they're questioning everything. Like, is this really a good deal? How do I know? And so for me and you, when we talked about it, it was like, well, we'll keep it. If you don't want it, don't take it. It's no stress off of our back. What we're trying to offer up is to show, hey, this is something we actually bought. If you would like it, feel free to it. If you don't, no worries. So, because we have a lot of clients that want to build their portfolio, but they don't have time to go see a property. They don't have time. They're business owners, and I have one right now that is just getting into real estate that wants to build his portfolio. And it's like, but how do I know?
Yeah,
And
it's solving that problem.
it.
It's solving that problem. And I've struggled with the same problem for our clients over the years where I'm like, hey, yeah, they want to buy. And it's like, well, I'm looking at deals, and a lot of times they don't make sense, especially where interest rates are, and to leverage, have debt on the properties. Yeah. So this is solving that problem where, hey, this is a deal that may make sense for our clients, where it's going to be a better return for their money than having their cash sit in their savings account or their IRA or other things. Yeah. If they're getting 2 or 3%. We had a client that he was getting, before he was getting 3 or 4% on his money. And then they changed it where he was going to be getting less. I think he was going to be getting like 1 or 2%. And
a lot of that is right now.
He was willing to buy a property for $400,000 in one of our markets, and the rent on that property was about $2,000. And he's like, it's better money, it's better return than what I'm getting, in the bank account. Mm-hmm. And the properties that we're offering, it's a win-win because they're newer builds. There's a piece of equity. There's multiple things we can do with them in terms of our vision of it for them is to rent them out long term. Mm-hmm. But because there's that equity piece, they could be flipped. They could be definitely flipped because you can see the equity and you can look at the values on them and say, yeah, this is below market.
And it's an opportunity for our clients to build their portfolio, which
absolutely.
A lot of them want to do that. But the question mark is, where's the deal? So let's talk about that a little bit. What is the deal flow? Because you do this weekly and analyze properties weekly and daily. What is the deal flow to us? And let's talk about that a little bit, because that is the biggest piece for people to find deals.
Yeah, so by comparison, as I was describing a minute ago, we would get 1 or 2 for the entire year. Mm-hmm. And I want to say that in 2023 and 2024 and last year, we got just a handful here and there. And this last year, already this spring, one of the weeks in May, we matched our record. And I'll explain that is the last time
I was on a trip and at a conference and got a text, hey.
Yeah. And part of it was because on some of these times, and sometimes we get extremely lucky. And what I mean by that is lucky because, and some people say there's no luck. There is luck in the sense of, doing this for so long, there's times when you don't have any competition. Mm-hmm. And some of the deals that we've gotten for $1 over. And that's lucky. That's really lucky, but it's not lucky because I show up, and what I mean by show up is I look at the trustee and the list every day, and I'm consistently bidding. If the numbers make sense, I'm consistently putting a bid in there. And many times, this is what you bring up the whole question of deal flow. Majority of the time, even when I was doing it for the last 3-4 years, and like I said, we've been doing this since 2010, but I've been more intent the last 5 years looking at it. They postpone very regularly, almost on a daily basis, and they get postponed for years. They get postponed for 2 or 3 years. And you'll see them come back every month or every few months as, hey, it's on the list and here it is. They postpone, they're canceled. Something happens with the borrower where they make a payment and then it's like reinstated, or their loan is reinstated. So all these things they impact. In fact, several wholesalers, I went to a class from a wholesaler from a guy I've known for well over a decade too. We used to borrow, we actually used to do business with him before, and he wrote it off. He's like, we don't even look at the trustee sales because if you look at the volume, and then again, this was 2 years ago, he's like, this is the total number of actual properties that have sold. He's like, it's not worth it. So he pursues things off market instead.
So
my point being is all this to lead in to say, look, we are seeing more and more properties that are actually coming and they're actually being sold at the trustee. At least what I'm seeing.
Yeah. But that's not our only deal flow. Like you have trustee sales, you have wholesalers that I get messaged a minimum of 10 a day. And I have a guy that calls me all the time, say, hey, here's a deal. And I've let him know what our specs are. And even when I tell them our specs, I still get properties that don't match it because I'm like, hey, I'm real conservative. So And you do the same thing. You have wholesalers that contact you, and then we have contacts that give us deals as well.
Yeah, so there's deals that way as well.
So there's a huge deal flow that you get. And even out of all the properties we look at, there's only a handful that we will bring on because we recommend them. And so that's what I want to hit on a little bit next. Because when you get these properties, you don't have hours to analyze them. What is the first thing you look for to go, okay, I can look farther into this property? To know if it works or doesn't work on the cash flow.
Yeah, great question. And going back to the flow, and not to backtrack too much, but when I was mentioning that we broke the record, so the last time we saw a property at the trustee sales, which is what we're talking about right now still, the most that we ever bought way back in the day, and I believe it was in 2011, we bought 5 at one day. And this last a few weeks ago, we bought 5 again. And half of it was because on these properties that were in secondary markets, there wasn't one competing bid. So we got it for $1 over. And the question is a great question of, hey, what do I look for? I pull up 2 different quick estimates. I pull up Zillow for quick value. I pull up also RPR value, which is the Realtor Property Resource Value. So I pull it up, and what I look at is, I look at to see if there's going to be equity in it. So if I see that, hey, the opening bid is $200,000 or less, and I see that the value is above that 300 or 350 range, I'm like, hey, there's a good amount of equity. There's 6 digits in equity. That's fantastic. So I look up that, and then I also pull up and I will analyze and say, hey, what are the rents? And if I'm confident that the rents are going to be close to that mark and it's going to make sense for buy and hold, then I'm going to pursue it differently.
Well, let me change that. Let me dig into that. What's the mark for the rents, though? Because people viewing right now is like, what are you talking about? What's the mark for the rents? Like rent compared to price purchase. What are you looking for?
So this is a mark that I've known since one of our mentors taught us back in the game of 1% rule. Mm-hmm. And let me emphasize a caveat here, which is we don't always achieve this with these, but we have in several cases where we've gotten very, very close, if not to the 1% rule. The 1% rule is if you buy a property, for example, for $200,000, 1% of the $200,000 would be $2,000. That would be the monthly mm-hmm. amount. If you can get close to that 1% rule, then overall it can make sense as a good deal. So we've done that where we've had properties that have we've bought for around $200,000 that have been able to achieve about $2,000 in rent. Again, it's not always the case. It's not necessarily the case every time whatsoever, but we're getting closer and closer to that mark. And so when you add up hey, this is a newer build, you maybe had one owner occupant that didn't perform or had hard times, and they ended up losing the property, and you combine that with being able to get rents close to that 1%, it makes for a great opportunity for investments for long term.
It does. Let's talk about that. It makes for a great opportunity for investments. What do you think, what are we trying to create with the investor experience with this? Because I think a lot of investors have the issue pulling the trigger right now, right? Because everybody out there is like, it's not a great time to invest. But what we're seeing is completely different. Like, what would you say to those investors?
So there's always going to be, it's the opposite, right? I think it was Warren Buffett that said, when there's blood in the water, or what he said, what did he say?
When everybody's scared.
When people are greedy, be cautious, and mm-hmm. when people are cautious, be greedy. And when people have concerns and they're cautious, it's a good time to leverage and be like, let's buy up more properties.
Well, isn't
it's
case in point, when COVID was going up and everybody's like buy, there's a lot of people that got caught with their shirts because they were thinking it's going to continue to go. Same thing in 2008, right?
Yes.
Everybody's like buy. And what did you say? I remember this like yesterday. We were sitting down at a board meeting with our advisory board, and I remember you saying this. I had the book open for me. You said, everybody's greedy right now. We're holding. We're not buying a penny right now.
Oh, you were impatient too. You were very much, not to throw you under the bus, but you were very much
I get thrown under the bus all the time.
No, but you were very anxious and be like, why aren't we buying? Everyone else is buying. And now you see several stories of people that have had they've had calls. They've said, "Hey, capital call. We're going to have to require investors." All these
things. That's happening today.
And they're nightmare stories. People that have lost millions of dollars because they bought on a cap rate, and then the market shift, and now all these people several of these operators have come and they've lost millions of dollars. They over leveraged, and now a property that they bought at a say a 5 cap rate is now a trading on a 4, whatever it is.
2 or 1 or.
Yeah, or a 6 cap that's now a 5.5 cap. Well, that represents millions and millions of dollars.
But what you're saying right there, hold up. What you're saying right there is a case in point. If you buy right, then you'll be okay. The problem is a lot of these people bank on what? Appreciation. And when you're banking on appreciation, you're banking on the market continue to go up. And you can't always bank on that. That's like playing poker, going, hey, I'm going to bank on, hopefully I win. You don't know when the market's going to turn. And so when you said I was impatient to make sure we were watching the deals, analyzing the deals. Like, I have never been one to buy a property or want to buy a property that does not work. That is one thing that I get very animated about, because how many times I'm like, don't buy a property, I think it's important to know you buy right, you make money. You buy wrong, every single time you're going to lose. And
I've been more trigger happy lately because of the newer build and because of the equity. And I'm like, hey, we have multiple options. We can either fix and flip them, or we can hold them. And single family homes, they have the opportunity when they appreciate, they're a single unit. They can be sold separately compared to a bigger multi-family commercial building.
It's true.
So yeah, there's these different opportunities there. But
and there's a lot of opportunity right now. I think you've hit something on the head that's really important. Right now, people are scared. People are like, oh no, it's not a good time to buy. And in reality, it's actually a really good time to buy. It's a really good time to get into real estate. Now, you got to buy right, and you got to wait for the right deal. You don't just get trigger happy and buy the property, but you look, you analyze, and you make sure the numbers work. If the numbers don't work, you walk. If the numbers work, then you look at it.
You can always drive by and touch and feel the property. Investors and our clients and other people can take confidence knowing that if it's a newer build, it's got a brand new roof that's going to last 30 years. And it's got the systems. It's got an AC system and a water heater that shouldn't need to be replaced for 5 or 10 years. The life expectancy. I mean, we've had, when we were first getting into real estate in 2010, we had a lot of properties that were Class C that had original systems on them. So you're talking a 30-year-old, AC system that was still running.
Yeah, that
in many cases, and we would only replace them on a case by case, as need basis. And so clients can take confidence knowing that when they buy a property that's newer built, say it was built in the last 5 years, from 2020, 2021, and more recently, that they're not going to need to go replace a roof. They're not going to need to go, most likely, they're not going to need to go replace the AC systems. Those are the 2 biggest systems that you have on the house. And also the fact that these homes are new build, you don't need to go remodel it with new flooring, new paint, new kitchen cabinets, countertops, none of that. Worst case scenario, you have a renter that's a little rough that you need to repaint the units, maybe replace some carpet if they had carpet, but they can take confidence knowing it's real estate, it's a solid investment, and it's newer builds. So you are gonna run lower maintenance costs, in my opinion, on these newer builds than you are on the older builds.
I'd banter back a little bit on that one, but yes, it will be lower than the older builds. Maintenance cost is still up. But it will be less. Now, a big question that I got that I want to ask, because as we offer these properties up to investors and our clients alone, how do you make sure we stay aligned? How do you stay aligned when we're both keeping properties and offering them up? How do you make sure that they know that it's a benefit to them and it's not something, because there's so many scams out there today, let's be honest. How do you make sure we stay aligned and that transparency is so transparent for them?
Well, there's a couple different ways we can. If the property is already leased out, that's a win because we can show the lease and say, hey, here's the actual rent that's being achieved. If it's currently vacant right now, our clients, if they're interested in these properties, we can go walk it and tour the property so they can see the actual condition. They can validate that it's in rent ready condition. We can also show the rental comps and say, here's the actual comps. Even though some of the markets are still declining, you can still say, hey, here's what the rents were, and even though they may be falling in certain areas, but they can take confidence knowing that they can go kick the tires beforehand. When we've bought the properties on several of these properties, especially that are from the foreclosure sale, in many cases, we don't know exactly what we're getting on the inside. We've taken that risk, And we've taken that uncertainty, that unknown off the table.
Yeah.
We know what they're getting. We know the condition. We've documented it very well, and that's the opportunity they have.
It's true.
So those are great things that if those are the part of their concerns, we can mitigate and we can address every one of those concerns and say, hey, here's what the return's going to be because here's what the rent's going to be, and here's what the purchase price is, and what's being offered on the table. So it's very transparent, it's very clear, it's very confident. They can take assurance in knowing that it's they have their both eyes wide open before they pull the trigger and make the decision on it.
Why is it important that we're willing to keep them? The properties.
Yeah, it's a win for us because, we know that there's equity in the property. We know that it's a good deal, and it's a win for us because we're already in these markets. You talk about some of these cities. I mean, these are cities that are in, all over from Maricopa County and to Pinal County. And again, many cases, these are properties that are in, again, this market of tertiary, market where it's in Pinal County, you're talking Coolidge, Arizona City, Casa Grande, Eloy, Maricopa. And so, I mean, when we first got into that market, we've been buying down there since 2017. Right now we're in 2026. So we're talking about almost a decade now.
Yeah.
And we experienced, again, at the time, a lot of the rents that we experienced back then on some of the multifamily, they were a lot lower than they are today. So we saw the rents go way up, and now they've started to come back down again. Mm-hmm. But they still haven't come down to when we first started.
No, not at all.
In that market. So my point being on some of the homes and the units that we had that are multifamily, they're most of them are 2-bed 1-bath or 2-bed 2-bath, and they're still stronger by 25 to 35% than when we started. So they're still strong. But no, it's just a great opportunity for those that want to invest and to instead of having their money sit in a bank account or wherever it is in the stock market, they can invest in real estate, and we're giving them the opportunity of, hey, here's the market. And these are off-market properties. These are not going to be put out, the ones that we're offering to our clients. These are ones that, it's important to know that we're holding them because we already pulled the trigger. We did the risk. We've already done the fix up. If it needed some rehab or needed to get rent ready, if it needed new paint, needed new floorings, we've already done that.
We've already done the lift.
So it's a matter of we're offering these that are rent ready or these that are actually already leased out with a lease in place, So we're willing to hold it because it makes sense for us to hold it. We're just offering this as a win-win for our clients because, again, capital and with our partners and other people, every client's capital can only go so far.
100%. I think that's what's cool, that it is only for our clients. This isn't anybody else that can just get access to these properties that we have already purchased to make sure that they know that we would recommend them because we're keeping them if they don't buy them.
Yep.
The question I have is, where do you see this going in the next 3 to 5 years? Like what we're offering to our clients right now, what we're doing, where do you see this going?
Well, if the volume keeps up, I see this expanding and growing in quite a bit where we're still going to continue to have opportunities for our clients to invest and to be the source for them when they know they want to expand and they have more capital to invest. So we would love to be their go-to, and whether it's through us or another, we would love to analyze and help out our clients when it comes to growing their portfolio. So that's where I see it going. I do see it, with how the market we're in a downturn right now. I do see there becoming, more opportunities for investments.
100%. I see some major opportunities for our clients. I also see it getting a lot bigger as we are rapidly growing Rosenbaum Realty Group right now, and bringing on a lot of new clients. I see this as a huge way for people to build their portfolios, and knowing that they have someone that has already bought it and trusts the property and has already analyzed it, all of a sudden it takes out that guesswork that you're trying to do. Someone's already walked it. Someone's already had manpower on it. It's not burnt down. Or we already took care of the rats, which seriously just happened. We bought a property and it was great. And then all of a sudden we had a leak in the property. We sent someone out and realized there was a rat issue in it. Things like this happen off of the auction, but we already took care of it. It's taken care of. There's already a lease on this property. And I'm like, yay, we got it taken care of. So, but I know we're wrapping up in time. What would you say to our clients or anybody listening, the value this is for them? And truly, what's the purpose behind it for you?
No, I get a lot of joy helping out our clients, and I get a lot of joy when we can share the wealth and share the benefit of investing at the trustee sale. most people, there's a lot of unknowns again, and a lot of people don't, they're limited to even being able to do a trustee sale because they have to go use their own cash, or they have to use hard money. Mm-hmm. And those are, in either case, those are risky. Mm-hmm. If you use hard money, you're talking minimum, 10 to 20% on the interest rate, and that's high risk. So if it doesn't pan out with the numbers on a fix and flip or on a buy and hold, it's a risky situation. So I find a lot of joy in sourcing these properties because, I know the numbers make sense, and it's a better return on what they can get elsewhere. And there's no better way to build wealth than in real estate and with a buy and hold. And I'm ecstatic. And you bring up, hey, where's this going? I think that we may not have as many opportunities where we're getting no competition, and I've already seen that where some other deals lately on the bidding process where I was getting lucky where I had no competition. I was getting, in some cases, $1 over. I think that's going to be as it may get more and more popular and more people going after it. You may not see that as much, but we're still going to put in offers to what makes sense, even if it is $50,000 or $100,000 above the opening bid. But for our clients, bottom line is it's a solution for their problem of, hey, where can I put my money? Where can I put money, and where can I put it in real estate, and how it can be managed and everything else. So we're offering that solution as a win for them.
It's a good opportunity. I'm really excited about it because I remember the day that we got into real estate, and I remember crying in the living room because I didn't know if it was going to work or not, but we had nowhere else to go except for up.
We took the risk. We took the jump.
We were on food storage. We had no food in our fridge, so it was a different ball game. But we took that jump, and I want to make it where it's easier for people to take that jump because that jump's hard and it's scary, and the unknown, the anxiety, is this going to work? And so, but I do want to wrap up because I want to be respectful of your time. I know you have a lot of meetings today. But what we're really building here is simple. Access backed by experience. Daniel has insane amount of experience with analyzing deals and making sure clients trust him. His integrity is one of the most important things that I've ever seen to a man. And he will tell you not to buy something before anything. Like I remember back in 2010 when he told investors not to buy things. Because the property just wasn't the cap rate that we recommended. These aren't deals we're hoping work. We've actually ran the deals, we understand the numbers, and we've actually bought them. So we're backing everything by the experience and what we actually have.
We're taking away the uncertainty and the unknown for the clients because they can go see it, they can look and feel, and we can, hey, here's the numbers, here's the purchase price being offered, here's what here's the condition of it. Go kick the tires, go look at it.
Go look at it. If you're an investor who wants fewer unknowns and more clarity in your decisions, this is the direction we're headed. We are offering things to our clients that no one I know of right now is offering. And then that's what I'm excited about. I'm excited to offer seriously properties that are the most guarantee you can get. Nothing's guaranteed in real estate, but that someone's already bought and realizes that they've already run the numbers. Reach out if you want to be a part of the first wave of investors who see these opportunities as they come alive. We are only offering this to our clients alone. We are excited for this, and we're excited that you're listening today. If you have any questions, feel free to reach out, and we will be here to answer questions, how you can become a client, and how you can have exclusive right to these properties. Daniel, thank you for coming on today. If you have any last words, feel free to let the people, viewers, listeners, and our clients that are listening, what would you like to say to them?
No, it's my pleasure to join you. I appreciate the opportunity and the time, and it's a win that we're looking for. It's a win-win for us, win-win for them, and it's a way that we would love to help grow their portfolio. And it's our pleasure to sit down and analyze the deals. And I'm excited about it. I'm excited about it because I can't believe I haven't seen this for over 10 years where I'm just like, hey, there's so many good opportunities. And especially that it's newer build. So I get excited about that. Yeah. And I get excited about, hey, these are newer property. So
no, it's true. I feel like we're back in 2010, almost 2011, with everything that's happening.
And the opportunity to see the 1% rule in our market in Arizona. I mean,
it's insane.
I haven't seen that for a long, long time, and now I'm seeing it again, and I'm getting giddy about it because I'm like, it's been years. It has been. So that's all I have to say. But thank you so much for the opportunity and the time.
Thank you for coming. We could talk real estate all day long because we're very passionate about it. But thank you for listening, and until next time, thank you.
Thanks for tuning in today to The Road Less Traveled. If you're organizing an event, workshop, or simply planning something exciting and would like to have Tiffany Rosenbaum join you or want to have her on your podcast, visit TiffanyMRosenbaum.com and click on Book Tiffany to get started.